Welcome back to the channel. My name is Brad, and today we're going to talk about AIPI, FEPI, and CEPI. If that's what you're looking for, stick around. So my name is Brad, and I've been retired now 8 months. And I look at funds that maybe you want to invest in, maybe you won't want to invest in. But I am going to look at AIPI, FEPI, and CEPI. So these are from Rec Shares. FEPI is a equally weighted fund. So each one of their funds, stocks underlying, is equally weighted. The list here is the exact list that they own. They actually just came out with all their new calls. So everything was equally distributed again. And here they are. They have Tesla, they have Apple, they have Adobe, they have AMD, they have Amazon. You can take the list and you can see that they're all equally weighted. AIPI is for AI, right? And you can now look at their list. They're not equally weighted. So NVIDIA is 10%, Palantir is 9%. So you can see how these are not equally weighted. ARM is 6%. So they're not equally weighted like FEPI. They're relying more on some of the technology stocks than others. CEPI is not equally weighted, and here's the list. Keeping in mind that 6.92 is actually cash. That's just a money market account. But here's the list of everything they have. They have miners, they have Visa, they have Tesla, they have NVIDIA, they have MSTR, MicroStrategies. They have Robinhood. So they have a lot of different crypto-related stocks in their portfolio. One reason that I never bought into CEPI, because they used to have Bed Bath & Beyond, Barn or something like that in there. That is now no longer in the fund. It is totally gone. They got rid of that stock from their underlyings. And one thing I like about Rec Shares, they hold the underlying. People can argue all they want about the difference between holding the underlying and not holding the underlying. And all I'm going to say is, so the funds that appear to hold the underlying appear to hold the NAV better. We're just going to throw it out. And that it becomes the mechanics. And you can argue about the mechanics all you want, but holding the underlying is important, at least in my book. Maybe you like to have to reinvest back into the funds, and that's totally okay. But one thing I have done for the mid-tier members and above, you now have a spreadsheet that I've already published to all of them, showing you how far out of the money each one of their calls is. They did tier calls. You see exactly what those percentages are on all their calls. You can see the percentage of change, and you can see the percentage of change from the date that they wrote the calls. Brand new benefit to all the members out there, just in case you want to become a mid-tier member or above. So the lower tiers don't get that, but all the mid-tiers got that sheet earlier today, so they can see exactly how far the money. And they can track that all the way up until they roll the calls. Then I'll just update the spreadsheet. It's not that big of a deal. It only took a couple hours to build, easy enough. So AIPI, you can see where they are. You can see that how far they're out of the money. They normally are 5%, but now they're closer to 7-8%. That's because the volatility's up. And you can see on their tiers, they go up to 8, 9, even 20% out of the money on AIPI. That's pretty good. So the rest of the calls of AIPI, IBM's a little close. They actually have MU that has a small portion that's in the money, and you actually have SMCI that they sold a small portion on that's actually in the money, but everything else is out of the money, and you can tell their percentages. Remember, these guys are targeting that 34%. So you're going to get 34% on this, but their capital appreciation is based on these stocks going up in price. FEPI is going to get you that 24, 25%. And they do it consistently every month. And again, they go back to looking at how far out of the money these calls are to be able to get you some capital appreciation. FEPI this month on their calls. Well, Apple's 5% out of the money, Adobe's 6%, Amazon 7%. So you can see exactly how far out of the money they are. And again, they did some tier calls. So they're laddered, right? One strike price and then the next strike price. Google, they're 7%. The second one is 10%. And again, that spreadsheet that I've shared with all the members or mid-tier members is updating every 20 minutes. So you can see exactly how far any day of the week these are out of the money. On FEPI, they also have Meta, which is Facebook, and they're 11% out of the money. Tesla, they're almost 10% out of the money. So you can see exactly how far they wrote these out of the money. So on CEPI, which I do not own, and I'm really thinking about getting into it now that they've dropped that one stock that I really did not like. I mean, I really didn't like it. But at the end of the day, you can see how far they're out of the money. You have Hood being almost 19, 20%, 27%, right? Marathon is 15% out of the money. And CEP, and one thing you should remember about CEPI is paying you 40+%. Very volatile. They also have in their holdings Visa, Tesla, PayPal, Nvidia, MicroStrategy. This XYZ, if you don't know, is Square. Square's 27% out of the money as of this morning. Today was a big red day, but they just rolled these yesterday. So you can see exactly where they are and see if you want to get into the funds or not get into the funds. And one thing I want to do this time around is I want to show you some charts. And I want to show you the charts and compare them to Curve on some of them and what they're actually doing. So let's look at some charts together. The first chart is Tesla. So their actual call is the red line, whereas that is the same as the synthetic for Curve. Curve's other call is the green one way up top. But FEPI and CEPI both have Tesla, and they both wrote them at that 380. The yellow vertical line is when they will re-roll these calls. So you can see how much time they have between now and then to have capital appreciation. The next one's NVIDIA. So on AIPI and FEPI, they wrote them at the two red lines. You can see where they are in their ladders. So you have to have new all-time highs or pretty close to new all-time highs on NVIDIA for them to get capped. Again, the yellow line is when they will roll those calls next month. They do that on the third Friday every single month. On AIPI and FEPI, they also have 3 calls on Palantir. You can see the red lines, they're all 3 calls. You can see that it has to go up to new all-time highs for that third call. But this is how they wrote those calls. Again, the yellow line being when they will roll them again. On Amazon, today was a big red day for Amazon. But where they wrote their calls are the yellow ones. Curve has their synthetic all the way down at the bottom with the red line, and their actual call is way up at the top on Amazon. But for FEPI and AIPI, they wrote them at the 2 yellow lines, and the yellow vertical line is where they will roll it again. So right now, there is lots of room for Amazon to go up and AIPI and FEPI to gain those appreciation. Netflix, I always liked Netflix. So Netflix, their first call was right on top of Curve's call. The second call was above Curve's call, and Curve will roll them in a week or so. Keep in mind that FEPI will not roll these for another month. You can see where their calls are, and the beauty of this is they own the underlying. Keep on pointing that out. They don't have to pay you when they roll that synthetic. Just how they actually are based. So that's why I like FEPI AIPI. For CEPI, I thought I'd pull up a couple of these coin, which is Coinbase. And you can see exactly where their calls are. They're the two red lines, and you can see the yellow line being when they will roll them. So if coin goes up between now and March 21st, you'll have some gains, and you'll see that in your NAV. The last one I was going to take a peek at was Robinhood. I don't own any Robinhood in any of my funds, really. So I said, oh, let's look at CEPI and Robinhood. So Robinhood, you have to get back up to new all-time highs where they wrote their first strike, and the second strike is well above that. Again, the yellow vertical line is when they will roll again, but you can see that you have plenty of room on Robinhood for Robinhood to go up in pricing. That brings me to the end of looking at these. You can see that today was a big red day, and you can see how much of a difference it takes for FEPI to hit those strikes and those percentages. AIPI has to go up in price to hit those strikes, and CEPI also has to go up in price. You can pause the video or go back in the video and see exactly where they are. Just showing you where the strikes are. But if you're a member, the spreadsheet, mid-tier and above, you have the spreadsheet that you can go look at anytime you want to, see exactly how far they're out of the money, or if something has gone through the first strike or the second strike. So until next time, God bless.